come close to what it is.
What was the last job before she's Treasury Secretary now?
Yeah, she was the Fed chair.
And now she's the Treasury Secretary?
I know.
What am I, 6 years old? I don't see this bullshit right in front of my eyes.
Yeah.
And you're talking about the banksters. Once upon a time, it's coming up now. It's called Easter Sunday. And it was about the Prince of Peace. And this is a cover from the Trends Journal.
Yeah.
Back in 2000, let me see when this is. This is an Anthony Frieda cover. He's a genius. This is when it used to be a quarterly. 2012. You see that?
Yep. Yeah. Get him out of the temple. Well,
Citi, Wells Fargo, JP Morgan Chase, Goldman Sachs. Nothing has changed. Oh, and by the way, after Christ drove him out of the temple, 3 days later, he's on the cross. You don't screw
Yeah. Imagine my shock.
Yep. And that's who's running and ruining our lives. That we have a central bank. Again, look who brought it to us. Woodrow Wilson. May he rot in hell. He gave us World War I. And everybody, he gave us federal income tax and the Federal Reserve. America, America. America. You're spelling it wrong. Yeah. So anyway, give me your assessment on when it's only a wild guess. But again, I believe that I'll tell you why March. March is in October are the two volatile months that I've seen in equities. Mm-hmm. And I made my reputation when I called the 1987 stock market crash. It's October. And I called the dot-com bust and the panic of 08, took out that domain name in 2007. Going back to the October 1999 in our Trends Journal magazine, we wrote that the markets would crash. The dot-com bust would happen in March. No, excuse me, the second quarter of 2000. It happened in March. So we write on by the second quarter of 2000. So I believe we're in that process now. I'll tell you, we have to find out here's my forecast. If they raise interest rates 50 basis points when they meet in, was it March 23rd or something?
Yep. Mm-hmm.
I believe the markets are going to crash and the economy is going to follow. And what everybody has to understand, that the interest rate hikes that have been going up, it takes time for them to hit through the economy. It doesn't happen in a day. It takes several months. And we're on that path. So anyway, that's my take. What do you think? We're going to take a break now. We've got a lot more going on. And this is why you subscribe to the Trends Journal.
Get the Trends Journal, the best investment you could make, because it's the best investment into your mind, and it can change how you look at the world.
Over the last 30 years, Gerald Celente has been more accurate about predicting what would be happening than anyone else I'm aware of.
The Trends Journal is one of the greatest sources of information, and and it really is. You're predicting these things well ahead of time. I would encourage everyone to go grab the latest copy.
But Trends Journal subscriber for 20 years. I just have to commend you. What you guys have put together in your latest Trends Journal, there's nothing like this out there.
Sir, everything that you predicted about the economy, you were absolutely right. So I have followed you all this time. So please take a look at the Trends Journal.
You correctly forecast that the Fed would hike rates quite aggressively. Correctly said that initially gold and silver would drop as the Fed starts to raise rate to 1.5% and above. When we spoke last, Bitcoin was around 49,000. You said you expect to drop, and if it drops below 30, 35, then it could really drop.
Trends Journal, which I would encourage people to go and check out. It's actually a 200-page document, pure data-driven analysis.
Gerald Celente, the top trends forecaster in the world. Gerald, you had an interesting call back in September of last year. You said gold had bottomed, which is exactly what happened. And here we are, and we're above $1,900.
Subscribe to the Trends Journal. Read history before it happens at trendsjournal.com. What's
Well,
your view?
absolutely. I think that, well, let's just put a couple of more perspectives on this. So yes, there is a lag effect with regard to what the Fed is doing with regard to their raising rates here. I believe, unfortunately, for what I am seeing here now, that we are going to get a 50 basis point hike. Now, I came up with a little metric that people can, it's free to anyone who wants to look at it. It's right on my website, traderschoice.net. It's called the MMRI, Mannarino Market Risk Indicator. It's a neat little equation which equates risk in the debt market, which is reflective of what we can see in the stock market in real time. Right now, that number is sitting at almost at 260. When we hit 250 on the MMRI, I was telling people for months, watch for the first red line in the sand, 250. This market, since the MMRI crossed 250, we've seen this market fall under pressure. Now, and I've also been explaining to people, without direct intervention by central banks to do something about that, we could absolutely see, well, the next line in the sand is going to be 300 with regard to the MMRI. If we get there, Gerald, your prophecy here is going to happen. It's going to come true here. We're on a knife's edge. Anything can set this off, and I mean anything here. We'll see. I believe there's going to be some kind of an event here that's going to just miraculously happen. Unfortunately, people are probably going to end up losing their lives, a lot of them. And that's going to push people more towards backing an expanding war. I think this war is going to get a lot bigger, unfortunately. And this may be the pivotal moment here. But that would be, if the war does expand, which I believe it will, believe it or not, this would be stock market positive. I hate to have to say that, but it's the truth. Look back on the last couple of world wars.
Oh, yeah.
That and you know what better than anybody, because you coined this. When all else fails, they bring you to war. Yep. And that's true what they're doing here. So this would be a mechanism that they could use, because all they care about is the stock market. They don't give a damn about the regular guy or the regular girl here. It's just about propping up this damn stock market. And look, the investment banks, they don't care either. They don't care if the market goes up, down, or sideways. They're going to make money because the way they play their positions, and they profit from their own customers when the market goes down, when they have all their customers in long positions in the market. That's what they do. It's a scheme. But anyway, it's very possible that we could see a big event here. But again, I don't think people need to guess. I think I created this MMRI. Maybe you can use a link to that. It's right on my website, traderschoice.net, top of the second page, which allows people to see risk in the market in real time. Right now, this morning, we were about 257. Above that 250, we've learned, okay, and just from observation of the market, that is that first red line in the sand. If we continue to go up and we continue to see global debt sell off, we got a big problem. We got a monumental problem here. And they know it too. They know where this is going to go. Absolutely. And they're fostering it. We have a global economy contracting at its fastest pace ever. At the same time, they're raising rates into that, killing the consumer, causing people to become slaves to their system, dependency. They need more dependency on the system. And they're going to get it too. Did you hear a lovely, illustrious president? I can say some really nice